Hey everyone, me Kevin here. We didn't do a market open live stream today, and I'm questioning if we're going to be able to do a market close live stream, so I want to do this update, mostly because I don't feel too great. I feel kind of worse than I have in the past few days, even though I've kind of been sniffling and having a little bit of a sore throat and dry cough for like a week now, which is really annoying. And I have tested negative twice for COVID, but yeah, anyway, I guess I just have to get through it. So in the meantime, let's do a little bit of a recorded update here. Try to get through this without coughing. So, look, first, we got to talk about the infrastructure plan. Some stocks are moving up a little bit after the hard infrastructure plan passed. For example, Tesla initially moved up after the hard infrastructure plan passed. We had some euphoria around Tesla because of essentially the plan passing. Take a look at this. You nearly saw a perfect trend up as soon as the bill passed. Now that has quickly sort of reverted here. We're going right back down to under 710. This is not a surprise, mostly because the infrastructure plan passed the Senate, but it's not actually going to mean anything until the House passes it, and the House won't pick it up until the fall. The House is also probably going to hold the hard infrastructure package kind of hostage until they get the soft infrastructure package done. So infrastructure is going to be a little bit of one of those things where the real fight is ahead of us, not behind us. And this is because even though the infrastructure package right now, hard infrastructure, trains, bridges, rails, roads, $7.5 billion for chargers and so on, even though that's great, and it adds $500 billion roughly of new money, even though that's great, the big package is going to be in social infrastructure. Social infrastructure, that's where we're potentially going to see an extension of the child tax credit and tax increases on people making over $400,000, specifically going to be looking at capital gains, real estate investments. Those are things that could have negative implications to the market. So, infrastructure excitement, I wouldn't really let any of that enthusiasm get to me in the market right now. Instead, what's more important is what's coming up in the next 2 days. We got CPI and PPI coming out. CPI is Consumer Price Index. PPI is the Producer Price Index. Over the next 2 days, at 5:30 in the morning, these reports will be coming out. We expect them not to be pretty. We expect them to come in high. We expect the numbers to potentially even beat expectations because we're really not planning for an inflection to the downside until September and October. And the way things have been moving, who knows if September and October's downward inflection will actually be there? Because while we might get a downward inflection in airline travel and used car prices, especially if Delta continues to surge, we might see an equivalent increase in rental prices, wages, and other aspects like services where we already see inflation coming. So next two reports, they're going to be pretty big deals. So we're going to want to keep an eye on these. Then what we also have to keep an eye on is something that kind of bugs me to say, but it's true. Is, folks, diversification is the definition of 2021. I'm not a big fan of diversification, although I have generally advocated the metkevin.com/basket pie. If you type that into YouTube, or sorry, just your web browser, you'll see metkevin.com/basket. You'll see it's a sort of a pie of multiple different index funds. And it makes it really easy to diversify. Not financial advice, you don't have to invest in that, it doesn't matter. But that's done very, very well. And usually when folks join the Stocks and Psychology of Money group, I start folks out really broad, and then I narrow them down to special strategies. Like I mentioned this weekend, I plan on releasing some new options lectures. I also have some new lectures coming out for the real estate investment group, although no exact deadline yet on when those new lectures are coming out for the real estate group. We'll be talking about going from small deals to big deals, so that's going to be fun. But anyway, those courses are, of course, linked down below. You all know you can get 40% off with a coupon code, and you know the price goes up over time. Okay, so moving on. Diversification has been very good in 2021, and part of it is because right now in the Bloomberg terminal, we're getting a lot of talk about how all of these tech companies are kicking butt and how they're blowing out earnings, but the market and market participants potentially believe that these companies are actually going to be at peak prices because maybe people have already bought their car, they've already bought the stuff they want, and next year's earnings comparisons are not going to be anywhere near as good as what we have now. That is, right now, everything's a massive beat because last year things were slower. So now we're getting these massive, insane beats. People have more money than they've had before, spending money like crazy, creating that inflation. But then potentially next year, we see a reversal. So we've got a crazy market ahead of us. And I hate to say it, but it does make sense to diversify. It makes sense not to be all in on crypto. It makes sense not to be all in on tech. It makes sense not to be all in on real estate. I think a well-balanced portfolio has really a little bit of everything. Now, I've been talking about RCC a lot lately, right? Real estate ownership, crypto, and cash. I still think these are three very, very important things to diversify into. So if you don't own real estate yet, get into real estate. Get into a house that you can buy, you can afford, and you can house hack. I don't care if it's a townhome or a house. Get in, get started. 30-year fixed rate mortgage, doesn't matter if the market falls. Ideally, get a wedge deal, which we talk about in the real estate investing course. Cash. We want to have cash available for opportunities. I think we're going to have plenty of uncertainty coming up over the next 6 months. We just don't know when or where it's going to come. We can't time that in the future, but when the time comes, you'll hear about it from me. I'll be going all in. Okay, then crypto. Have some exposure here. I like having some exposure to crypto. I personally don't think it's something I want to be all in on though. And so this is why if I were looking at my portfolio right now and I were thinking, how do I want to allocate new money? I'd want to be allocating new money to those three things: real estate, crypto, and cash. The cash is going to end up turning into stock. So, and those stocks should probably be something relatively diversified. Maybe if the market does fall under some uncertainty, we go into a balance of recovery stocks, tech stocks, and maybe some industrial stocks. Who knows? Some kind of nice balance, whatever. We can figure that out when the time comes. But that way, we're looking at the money we have right now and trying to allocate it to three different places. Again, real estate investments, crypto, and cash. And we're not going over on any one of these three things. It's really a big belief I have right now. Crypto, many of you know, it's only about 3 to 4% of my portfolio right now. I do plan on increasing that. I don't know that at any point I'll increase it more than 8% of my portfolio, since right now I'm pretty much 50-50 real estate and stocks, although of course at this point I do have a chunk of cash and crypto available as well, and I'm looking to increase positions. So we'll probably end up with something that looks a lot more like 40% real estate, 40% stocks, and then 20% cash and crypto, maybe half and half on that. So anyway, a lot of uncertainty coming in the market. These inflationary readings over the next couple days are going to be really fascinating to pay attention to. So be prepared for those, and also be prepared, stay away, and I've mentioned this a few times before, stay away potentially from too long of call options. Leaps, I don't know, this isn't really the kind of market for buying long call options, in my opinion. We'll see. Could obviously end up being wrong. But otherwise, market overall, tech obviously sinking a little bit. We do have a crazy run on Fisker and 3D Systems. These are pretty incredible. Even Micron's doing very well. A little bit of a pullback on cryptocurrencies right now, but you've got recovery stocks popping up again. Yesterday they were down, today they're up again. Like yesterday, Dave & Buster's and Round Robin were down, now they're up again. Kind of incredible how flip-floppy the market is, but this is kind of the definition of a market that just sort of vacillates and doesn't necessarily really go anywhere. You just kind of trade sideways for a while or slightly up. And the best benefactor of a sideways trading market or a slightly trading up market, quite frankly, index funds. I hate to say it. I won't go into index funds. I will create my own sorts of M1 finance pies to diversify once we get to a little bit more of a market where I feel, this is the moment to strike on picking up some bargain deals. We're not there yet, but these are my thoughts on the market. Hopefully they help you out. Hope I feel better soon. And folks, we'll see you in the next one. Check out the courses linked down below. Thanks so much. Bye.